Hello guys and welcome to another develop video. Today taking an in-depth look at JD.com. JD.com Incorporated, also known as Jingdong, formerly called 360 Buy, is a Chinese e-commerce company headquartered in Beijing. So first, to analyze the company, must look at valuation. Their free cash flow yield is a great 11.26% and the price to earnings is 9.77. Their business metrics also look wonderful. They have a current ratio of 1.29, so they have very good short-term liquidity. They have a return on equity of 17%, return on tangible assets of 6.6%, and their ROIC of 8.11%. Now we must go to Grant's valuation, of course, using the revised formula with this new. So I've changed uh, the valuation because the old formula is very optimistic, is very positive on valuation, so it richly values companies too much, so it had to be changed. So using a 4.64 estimated earnings per share, a 5% projected growth rate, and the current yield on AAA corporate bonds, we get an intrinsic value of $45. Next is a discounted cash flow model using a 5% growth rate, which I think is less than they will grow, but it's an okay growth rate, especially for a company in a developing market. With a 2% perpetual and an 8% discount rate, we get an intrinsic value of $82, $82.5 per share. Now, for historical multiples, you can see that they've had a historical multiple of 372 because their earnings have only recently started to go up a lot because they're unprofitable for quite some time. And their trailing 12 months price to earnings is 9.4. Multiples I compared with Alibaba and PDD, which owns Temu, and we get an intrinsic value of $49.07. Now, for the dividend discount model, I use the same growth rate as in a discounted cash flow model because their payout ratio is only 20% and they can afford to grow their dividend at 5%. And we get intrinsic value of $34.3. Now, the output is the average of all of these four, and we can see that the average is $52.71. So this is the intrinsic value. And applying a pretty big 30% margin of safety, we get an intrinsic value acceptable by price, sorry, of $36.9. Suggesting that a stock is a very good buy, especially accounting for the fact that we've put in a 30% margin of safety. Now, you may say that this is a Chinese company, so the risk is basically assumed. All Chinese companies have an intrinsic inherent risk in them because of any potential conflict. And so this leads to higher margins of safety, but I think 30% is good enough for us. I think it's actually 32%, no, 31%. Yeah. So a 31% margin of safety. This is pretty good. Now, also looking at their free cash flow, we can see that they've managed to grow a lot, and this means that they have very capable management. Their business metrics look pretty good. Their valuation is pretty good. So all around, this is a great company. So they have a good valuation, good business metrics, good management, and I believe that this is a high quality company. Of course, there is the China factor. If you don't like investing in Chinese stocks, then no problem. There are opportunities in every market. But for me, I think this is a great opportunity. If you want to invest in a company, of course, do not just go on what I say. You must do your own due diligence because due diligence is the father of investing. It's the way to master investing, and you must do your own due diligence. What I say here should not be taken as financial advice. What I do with my own money is different from what you do with your own money. This has been it for today. To end the video, I'd like to talk a bit about our affiliate for today, ticker data. Ticker data is the tool that I used. So the template with the ticker symbol and the real-time financial data. This is Ticker Data. Also, do not forget to check out my investing blog from the link in the description below, where I feature in-depth analysis on a diverse set of topics that uh, include stock analysis, that include EU and US stock market comparisons, lessons from the 2022 tech crash, talking about the current market situation, and so on and so forth. I hope to see you in the next video. Bye.